So today we're going to be talking about co-signers. So what I'm talking about is I'll hear a lot like, I don't qualify for enough, but my parents said they'll be on the loan. And here's the thing that I always bring up. Okay, if you don't qualify for enough on your own, are your parents going to help you out with the monthly payment? Because that's the thing. A lot of times what happens is, let's say someone applies for $500,000 and we look at all the numbers and we're like, hey, like based on your income, you can qualify for $350. That's not enough. Okay, but like based on the numbers, this is what the payment is, this is what your rent is, this is what you have in savings, this is what the debt to income is, but that's not enough. Okay, and then it's like, well, you could have a cosigner, right, and use their income to help increase what you qualify for. Happens all the time. We see it every day. But the additional question I ask, right, and not every lender is going to ask this, is are they actually going to help you out with a payment every month? Because if they're not, this is going to suck. It's that simple. And like, I know I should talk more professionally. I'm never going to, but that's the bottom line, and people aren't thinking about that because they're going, oh, I only qualify for $350, but I want $500. My mom and dad said they'd co-sign, then I can have $500, but you can't afford the payment. And people aren't slowing down to go, oh shoot, I can't afford the payment. And that's what you need to recognize is that as a lender, our guidelines, we can qualify you into being house poor. So if we're telling you like, hey, you really can't qualify for this, like it's bad. It's not a good situation, and sometimes there'll be circumstances where it can make sense and you're not going to end up in a bad position. So what I would think about is often with people who are self-employed, perhaps their tax returns don't necessarily reflect reality. In cases like that, they may have more income that perhaps I, the lender, can't see. In a situation like that, you may be able to handle the payment. But if you're like, I have a salary, I don't get bonuses, I don't get overtime, I have a salary, and I only qualify for $350, unless your parents are going to help you with the payment difference, all you're doing is getting yourself and your parents into a bad situation, because that's the second thing that I think people don't consider. When you co-sign on a house or a car or anything, you are financially liable. Because I'll hear a lot. I'll hear, well, I co-signed on that car, but like it's not my payment. It's always when the car's late. And I'm like, yeah, it is. That's why you were the co-signer. You had to be on that loan because they deemed that this person was too big of a risk. So you're on that loan to make that payment if they don't. And if you don't make that payment, guess what? Your credit gets trashed. Same thing with houses. So if you're looking at buying a house and you don't qualify and you're like, I'll add mom and dad as non-occupant co-borrowers, great. But keep in mind, if you don't make that payment, right, you're ruining their credit as well. And they need to be aware of that because a lot of times co-signers think they have no responsibility. They go, oh, I'm just helping them out. It's not a big deal. But I've seen being a co-signer destroy people's lives, like destroy. And it's heartbreaking because it's like you want to help family, but at the same point, you don't want to help set up family for failure. And that's what I sometimes see is I see, hey, like your parents aren't going to help you with the payment. It's great that they're going to co-sign, but like, how are you really going to do this? Like, let's do a budget. Like, please look at the numbers. And I wanted to do this video because I don't think other lenders, like some do, but not everyone. Most lenders are going to go, okay, we have a co-signer. This is good. This will work. You may be so excited about buying the house, you're not looking at the payment. But when that payment comes, or if the insurance goes up or taxes go up, and if you can't make that payment, it's going to be on the co-signer. And if they didn't realize that was going to be their responsibility, or they don't have the money to do that, guess what? Then you're late. And then their credit's ruined, and so is yours. So really think about these situations before you get into them. I know the excitement of wanting a house can make it where you're like, oh, I'll just make it work. But I'm telling you, as someone who's been doing this for a long time and I've seen some bad stuff, you want to look at the math. You need to make sure it works. And if you need a co-signer, that means that you're going to need someone to help make that payment. So if they're not going to be helping with the payment, get a house for what you can afford on your own. Okay? Anyways, I hope this video was helpful. Thank you for watching. If you have any questions, please reach out.